you can kind of see that the average rainfall, is below average here, at least, gets us through the April 22nd.
Well, hi, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. I am pleased to welcome aboard Matthew Kruse, the president of Comstock Investments, and we'll take a look at the market situation here on a Tuesday. And this week, Matthew, I think the South American crop and production and harvesting and planting and everything is kind of getting overshadowed by what's going on in the immediate term with tariff talk. Lots of tariff talk, and it has really turned the market upside down and inside out. Now, today, here on a Tuesday, at least as we're recording this, everything is bouncing back somewhat on the ag trade and on the equity markets too. So give us a lowdown on what you think is actually happening here.
Everybody's trying to become an expert on tariffs real quick, aren't they? It's all everybody's talking about. And you had good coverage yesterday. I saw in your video, talking about how obviously no one likes the stock market to go down, but you got to take it within context that it doesn't only go up, right? We have a really good 16-year bull run, and so it invariably has to come down. You have those corrections. I think that's part of a healthy market, right? And so as long as it doesn't go down anymore, it really is nothing more than a blip on a radar. But it's just the fact that I think it happens so fast. It's dropping that hard that fast. But one of the things I feel compelled to talk about starting out, and I kind of hate that I have to do this, to try and correct some of the misinformation that I see out there about this discussion regarding tariffs. And one of that is, I don't post a lot on Facebook, but I'll follow it just to kind of gauge farmer sentiment sometime. And there's one gentleman made this post here about how there's, all these countries tariffing us, and so we got to tariff them right back. That was his argument, that it's only fair to do reciprocal tariffs. Well, I'm sorry to hurt people's feelings, but this is misinformation. The whole world is not tariffing the United States. And I don't think the government's made that very clear. Now, what they are trying to do is correct the trade deficits. And we do have a lot of trade deficits with other countries. And so I don't necessarily want to get into the merits of, how do we handle the trade deficits, but I feel compelled to kind of correct this misinformation that's out there that, everybody's tariffing us, so we got to tariff them, because that's just not the case. And if we're going to, I think, reach a positive conclusion to this tariff war that's happening, we need to kind of understand the difference. And an example that I would give, and I'm not an expert on Vietnam, but I chose Vietnam because they have a pretty large trade deficit with us. And I pull up some numbers that the U.S. exported $13.1 billion to Vietnam in 2024. Vietnam sold to us $136.6 billion that the U.S. imported from Vietnam. Now you subtract those two numbers, 136.6 minus the $13.1 billion, you get 123.5. You take that 123.5 and you divide that by that total imports from Vietnam, 136.6, and it's 90%. That's a 90% trade deficit. And that's, now you take that and you divide it by 2. The trade deficit divided by 2, you get 45%. 90 divided by 2 is 45%. And what's the tariff that the Trump administration placed on Vietnam? Just about that, 46%. So that's the math. It isn't. Now, does Vietnam have some specific tariffs against the United States? Yeah, they're relatively insignificant. Some of the bigger ones, they do have some tariffs on our ethanol at 10%, but they don't have a blanketed 90% tariff against the United States, which is what they suggest. But that's the math. They basically took the trade deficits and divided it by 2, and that's how they came with their calculation. And so I just felt that was kind of important to calculate. Now you could have a whole nother discussion about the trade deficits. Then, how do you correct those? Should you correct them? I think we always want to sell more to other countries. The thing I have a hard time getting over is we're the largest economy in the world. We consume 1/5 of the planet's resources, to be frank. Is it reasonable for us to then say a country like Vietnam, which is, I looked it up, the 33rd largest economy in the world, is it reasonable for the 33rd largest economy in the world to consume as much as the largest economy in the world? And you can go down the list, because we tariffed everybody. We tariffed third world countries, saying you got to buy more from us. You got to buy as much from us as we buy from you. It's pretty tough I think, to make that argument. But certainly there are some cases where, China could buy more for us and from us, and I hope that they do. So, I'll get off my tariff soapbox now. So,
what about the ag sector itself? How does this all fit in here as far as what we sell to the world? And I'm sure it's not even when it comes to different types of commodities that we produce right here in the U.S.
This is the biggest concern for us. It's going to affect different people in different ways. And I kind of put this chart together showing markets like the ag markets, the ag industry, which is export driven, export vulnerable, is going to have a bigger impact on what's happening here. And so you've heard us talk in the past, or at least our subscribers in the Comstock Report have heard us talk in the past about how the cotton industry has its neck stuck out here. And, to be quite frank, they were kind of limping along here before the tariffs happened. And my concern here is that these tariffs are just kind of a double tap to the head. I've talked to some other veterans in the cotton industry that have, worked with the U.S. cotton industry a lot longer than I have, for decades. And, the writing is kind of on the wall that this might just be the end of the U.S. cotton industry, which is disappointing because, they've had cotton planted in U.S. territories longer than we've been a country. You can trace cotton being planted back to the 16th century here in North America. And so, unfortunately, 3/4 of the cotton production in the U.S. is exported. And a lot of that, the buyer there, of course, is China or other industries, other countries in Southeast Asia that have all been, placed on tariffs now. And so, rice, soybeans, you can go down the list. Soybeans probably gets the most of the attention. But even wheat, is an export driven market. And kind of go down the list there. So there's a lot more, obviously, commodities than this. These are just some that I kind of quickly grabbed off of the most recent WASDE report. I didn't get into beef or DDGs or anything like that, ethanol. But 16% of our beef exports last year went to China. You can probably imagine that that's gone. And that's why the livestock market has reacted to the way it has, I think, to us in a lot of the other markets. And so this just kind of gives you a snapshot of what our vulnerabilities are, and so obviously now if this is, the longer this goes on, the worse it gets. These are markets that the longer it goes on, even if the trade wars ended 6 months, a year from now, it doesn't mean all that business is going to come rushing back. It helps. And so that's why, is this a negotiating ploy that's going to last a few days or a few weeks, or is this kind of the new structure in which the United States is going to operate? And so I think that'll have a big difference.
If that's the case, one thing I did notice here recently was amidst all the market movement, Matthew, we have had a lot of moves in the equity markets. We've had a lot of moves in the precious metals, the energy markets, that's for sure. They've had some big gyrations. One thing about it I've noticed is the value of the U.S. dollar has really declined from where it had been. And some would say, well, that's a darn good thing to help our exports. How do you look at that? Do you look at it the same way or not?
I've seen people point out how the U.S. dollar movement has, I don't know what you say, ironically, coincidentally, sort of tracked exactly Trump's first term as president, where it kind of rallied up until his election, and then since then it kind of drifted lower. And I think the prevailing thought when you have tariffs is that the dollar continues to rally and strengthen, because the idea is you're going to bring jobs and investment back to the United States, and it's going to push up the dollar. And last week we saw Trump say things along those lines that look at all these companies that are saying they're going to invest in the United States. But essentially the opposite has happened. And in the last several days has continued to happen, where the dollar continues to weaken. And I think that's what a lot of investors are saying. Look, this looks like we're headed toward a recession, and we might already be in a recession. And we heard, I don't know if you follow Jamie Dimon, the CEO of JP Morgan, that he talked about how the travel and airlines are dropping off tremendously, and he kind of referred to that as the canary in the coal mine. That when people start cutting their trips and they're traveling, they're all immediately starting to cut back, and usually followed by some sort of recession. Now, in the case of agriculture, this is actually a positive, which we weren't expecting. Is kind of a weakening dollar, right? Because it makes our exports a little bit more attractive and competitive on the open market. So hopefully that will offset, I guess, some of this potential loss in export market to China and other places. China is such an extreme example, because we've, starting to lose track of how much we're ramping up those tariff numbers, and they're still going back and forth. And Trump is talking about, basically taking it to 100%. Which at that point, you're pretty much done, right? They're not going to buy anything else from us, and so we either got to find that market someplace else with other countries, and so potentially that cheaper dollar helps. Now we've been, if you actually look at what corn has done, just what we've been through in the last couple of weeks, like we've gone through the prospective planning report, and now we've gone through tariffs, and we're up higher. Now, maybe not by a lot, but it's actually pretty amazing that we're doing as well as we are in the corn market. And a lot of that, I think, just has to do because of the demand that we have competitively priced corn. This cheaper dollar helps, I think, quite a bit. And so, if we get any sort of weather risk or weather scare, I think it could easily propel this market higher. So the corn is still, the fact that it's not dropping on extremely bearish news says that, hey, there's something to this corn market, and it's still pretty resilient.
Well, that's very true. And we're just now kind of entering our growing season in the U.S. Some early corn, I believe, did get planted, especially when you go further south. But man, we had a lot of moisture in the southern half of the Mississippi Valley and the Ohio Valley, and I guess the Tennessee River Valley and Cumberland Valley just got inundated with rain, over a foot, almost a foot and a half of rain in some areas. But now I think we're going to have a drier trend, aren't we, moving forward?
Well, that's what I see. You look at some of the forecast maps, and it really begins to dry out. And maybe that's a good thing in the Eastern Corn Belt. I guess at least initially the market was maybe looking at that as a positive thing, that the Eastern Corn Belt, where it's extremely wet, or down in the Delta, is now having time to dry out. They're also arguing that in the Western Corn Belt, well, it's already kind of dry, that, hey, they'll be able to get field work done quicker. And that's true up to a certain extent. Now this, you threw up this chart. This kind of shows the 2-week weather anomaly, and not to say that we can't get some rain in some places, but you can kind of see that the average rainfall, is below average here, at least, gets us through the April 22nd. And so it's still pretty early, but for the time being, boy, it's looks really dry. Weather, for the most part, seems to cooperate. It's actually, in the Western Corn Belt, temperature is above average. So it's going to warm up here. And so all of that kind of leads me to believe, boy, we're going to plant real fast here, because we got April 10th, in Iowa, you can begin planting corn on your crop insurance state. I think April 15th for soybeans. And so I don't know why you wouldn't start to see a lot of planters rolling, Marlin, here later this week, because it'll be warming up, it'll be dry enough, And but it's a little bit cooler in the Eastern Corn Belt. But I don't know. Last couple of years, it hasn't seemed like Chicago's cared much what happened in the Western Corn Belt. It just kind of looked in their own backyard in Illinois, and they made their decisions based off that. If it looked good in Illinois, then the market was going to drop. So,
well, it seems like the northern storm track has been hugging the Canadian border for quite some time, and it probably will continue to do that through much of April. And it seems like it won't let go of the snow track up there, up in the northern plains and the upper Midwest. It worries me that the soil temps aren't warming up very much up there.
That could be the case. Looking at the weather forecast that I've seen, that it looks like we're going to warm up here. Though we're going to warm front now for April. Now we'll see. It's happened where we've got frost that bounce back in early May. Yet I want to say May 13th is kind of the date where your frost risk drops essentially to zero. That it's pretty tough to get a frost date past that. So yeah, we're still have plenty of frost risk yet going forward. But at least looking out through the end of April, it looks like there's not much for weather to get in our way, and we can plant pretty fast. But eventually we're going to need some precipitation. We're still in kind of moderate drought for extensive areas of the Corn Belt.
I think based on Comstock recommendations here in the past, fortunately, I believe you pretty much, by and large, took advantage of that rally that we had up until about a month and a half ago. And I think a lot of farmers were maybe booked further ahead than they normally would be at this time of year to take advantage of that rally. Now it looks like that was a pretty darn good thing.
Yeah, in hindsight, I think we made the right decision. I think as time goes on, we're pretty pleased with that decision. And so yeah, we still had at least a third of our crop left going into that rally. And our last sale we made, we actually got $5 cash. And so I think we're pretty pleased with that. And then we went ahead and we started to lock in some new crop too, a certain percentage of new crop. And so, I still not at great profitable prices, maybe not as profitable as you like, but you got to start someplace. And so, it's just, we don't know where this is going to end up yet. I don't, everyone's trying to decipher what the tariffs mean. I don't think that you can, come to a conclusion after just a few days of trading. It's going to take 6 months. It's going to take a year, assuming these tariffs continue the way they are. And, I should point out that, or actually one thing people were saying was, well, there's something like 50 countries coming to the table to negotiate already, arguing that that's a sign that it's working. Well, Vietnam, it was talked about, was one of those countries. Vietnam basically said, look, okay, we're crying uncle. We'll give in. We'll reduce any tariff that we have. So can we knock this off? And the White House said, no, the tariffs stay. And because we basically don't believe you, there's still tariff cheating where you might help out China. And that's the reason for blanketing the world basically with tariffs. And you might have seen some of these jokes about how they were tariffing these uninhabited islands just with penguins in the Pacific. And there's been a lot of memes about that, man, why they're taking it too far, right? They're tariffing the islands. But it actually makes sense from their point of view that, people are savvy. They're shifting supply chains around. Well, if China gets tariffed, we'll just produce in Vietnam. If Vietnam gets tariffed, we'll produce in Indonesia, Singapore, or someplace else. And so they didn't want that to happen. They wanted to get out ahead of it. And that was their concern, why we're going to basically tariff every place that we can think of. So they don't try and dodge the tariff bill and just start rerouting ships through other countries or islands or nations.
And that kind of alludes to what I had heard this morning, that they were suggesting shipping through what they call a free port in Hong Kong to get things to China and avoid that. But I'm sure that loophole would be closed very quickly. There's lots of shenanigans that go on out there. I wanted to ask you just quickly before I let you go. What about this cold snap that went through the high plains recently? Um, that kind of worries me. I've talked with some producers out there in the plains. They said it got down into the lower 20s. Some of the wheat is turning blue from drought. And now here you have wheat that's probably a foot tall or more, and it goes in the lower 20s. That can't be good.
It can be good. You probably have more experience with that than I do, Marlon. You grew the stuff for several years or more, and so yeah, it can't be good. I think the market's, as we talked about before we started recording here, the market's up today, and so that might be one reason. But yeah, what do they say? Wheat has 9 lives, and they grow it everywhere, and so. In the scheme of things, it might just be a drop in the bucket. But yeah, for those producers, it's probably, could certainly have an impact. What do you think about it?
It really does make you wonder about, I've heard more and more stories about how the cattlemen want to walk the grain off the field instead of letting it grow for the grain because they get more value just letting the cattle graze it off and just use it for the forage side. So I just wonder how much of that we're going to find out in the next month or two. That should be very interesting.
I did hear that. I think Eric was talking about that the other day. He had some customers maybe that were mentioning that. So
yeah,
so it certainly makes sense.
Again, if anybody out there has some comments in that regard, and make sure you place some comments down below and share them with the rest of our audience, because I'd be curious to know myself. Are you going to keep the wheat, or are you going to graze it out? Are you having freeze damage out there? Go ahead and post a description down below. We'd love to hear it. All right. Well, thank you, Matthew, for talking with us. Always a pleasure, and we'll talk again soon. That's Matthew Kruse, president of Comstock Investments. And there you have it. That'll do it for this Tuesday edition. Appreciate you joining us. For producer Brianne Jenkins, I'm Marlin Bohling, and we'll catch you next time right here on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.